Comparing home affordable mortgage products. When it comes to home affordable loan options, there are several programs designed to help borrowers get into homes with less money down and flexible qualification guidelines and standards. Let's compare the most popular options out there. HomeReady is Fannie Mae's purchase and refinance program, primary residences only, allows for single family homes, condos, townhomes, manufactured, and 2 unit properties. Minimum credit score 620. You must be under 80% of the area median income. You can go to Fannie or Freddie's websites, check up their income lookup tool. You can see what the 50, the 80, the 100, and 120 percent of the area median is for your individual area. If you need help with that, give me a call. Happy to help. The program requires homeowners education for all the borrowers. If all the borrowers are first-time home buyers, one person has to take the class. If one person's been a homeowner, then no one has to take the class. Has loan level price adjustment caps, so it keeps rates down based upon loan to value and credit scores. It caps the adjustments, so it gives a lower interest rate. Down payments as low as 3% down. You can go as much as 20% down. If you'd like still using the same guidelines, you can also go to 105% combined loan to value using approved second trust financing. Appraisal waivers are allowed for eligible transactions. The next program is Home Possible, Freddie's version of Fannie's. They're almost identical in many ways, open to single-family homes, condos, manufactured 2 unit properties, 620 credit score, 80% AMI, home buyer education. If all the borrowers are first-time home buyers, at least one person has to take the class. Those are free. No loan level price adjustments, same 3% down all the way to 20% down. Approved secondary financing up to 105 loan to value. Appraisal waivers are allowed. The next program of the HomeOne, I like this program a lot for other reasons. It's a niche. Freddie's program is designed for first-time home buyers only. You have to be a first-time home buyer. But here's the thing, there's no income limits. So unlike the HomeReady and Home Possible that has a income limits of 80% AMI, this one does not have that. All borrowers have to be first-time home buyers, so someone is going to have to do the education class. It is for single-family condos and PUDs only, no manufactured multifamily. 620 credit score, 3% down, same 105 CLTV with approved seconds. Appraisal waivers are allowed. Next program, this BorrowSmart Freddie Mac program, 50% and below AMI, gets a $1,250 price incentive, and 620 credit scores, no loan level price adjustments, 3% down, similar to HomeReady, Home Possible guideline. Next one is I have a conventional lender with down payment assistance of up to $7,000 credit toward your down payment or closing costs that does not have to be paid back. That is the key for primary residence purchases using Fannie Mae or Freddie Mac underwriting guidelines. So it underwrites to Home Possible, HomeReady guidelines, minimum 620 credit score, 80% AMI. One person if all borrowers are first-time home buyers, one person has to do the class. Then you get 2% of the property value as a credit, or up to a maximum of $7,000, whichever is less. Okay, and you do need to bring the additional monies required to bring it up to a 3% down payment. Maximum 97% loan to value only. You can't put more money down and be eligible for this. So if you're putting more money down, 5, 10, 15%, you still may be better off to use HomeReady, Home Possible than standard conventional because of the loan level price savings and adjustments versus only putting the 3% down and being eligible for the $7,000 free money. So you have to weigh your options on what's better for you. No loan level price adjustments on that. Must qualify under HomeReady, Home Possible. Back ratio has to be under a 49.99 and get a approval through DU or LP. In summary, as you can see, these programs on their own, HomeReady, Home Possible, from 3% to 20%, these two columns can save people money by saving on loan level price adjustments if you're under that 80% AMI limit. HomeOne, if you're above those limits, BorrowSmart can get you some extra cash in some instances. But right now, the big money is if you put in only 3% down to try to be eligible for the $7,000 grant. So the whole key to all this is understanding AMI limits and what they mean to you as a consumer and a real estate agent. AMI limits, realtors, you need to understand the impact of 80% AMI in your local jurisdiction. Consumers, you need to understand that you can get into a home a lot cheaper, a lot faster than what you think. Okay, so let's get into it. In Fairfax County, the AMI limit is $129,600. Divide that by 12. That is $10,800 gross per month. This program allows for a 49.99 back ratio. You basically got to be under 50%. That's $53.98 roughly of that $10,800. That can go toward your back ratio. Remember, your back ratio is your housing ratio and all your debts added together. That's the back ratio. So we're working backwards into the allowable purchase price here, right? So in this scenario, we're going to say this person has a $500 car payment. That now lowers the front ratio maximum to being allowed, taking that $53.98 minus the 500 is now $48.98. Okay, so now we're going to back into taxes, insurance, mortgage insurance information. So we put an estimation of $538 in there for per month for taxes, $150 for homeowners insurance, $125 HOA, assuming like a townhouse, and we're going to stop there, and that gives us a $4,085 number. We're going to back into what a potential loan amount would be, and then we're going to use that to guess what our mortgage insurance is going to be with using a factor of 0.33, using a 780 credit score here, 3% down. That would be roughly $177 for mortgage insurance. So we're going to take that off of the of that $485. That's going to give us principal and interest of $39.07. $39.07, 6.5% interest rate, 30-year fixed. That's going to give us a loan amount roughly of $618,000 that someone can have a loan amount of. With 3% down, that would be a purchase price of $637,000. Here's the thing. This person would be eligible for the down payment assistance program that gives up to 2% of the purchase price or a maximum of $7,000. So in this scenario, someone could buy $637,000 purchase price, get a $7,000 credit toward their closing cost, and not have to pay that money back, putting 3% down under the 80% AMI. So there are a lot of homes in Fairfax County, Loudoun, Prince William, DC that are under $637,000, and they would be eligible for that $7,000 down payment assistance program. Here's the thing. Let's say you wanted to put more money down. You would kick yourself out of the program of being able to use the $7,000, but you would still keep all the affordable product guidelines like the loan level price adjustments and the savings on the interest rate going that route. So you would save on the mortgage payment, having put more money down, and you save on the interest rate because of the affordable products caps those loan level price adjustments. So there are instances where someone might not want to only put 3% down. They might want a lower mortgage payment, and that's okay. But just want you to understand, both as realtors and consumers, where that top line kind of is in our area, putting 3% down. Now, let's say, oh, Kevin, someone might have $500 in credit card debt and have so now we have $1,000 taken from our back end ratio, debt to income. How does that look, right? So under all that same scenario, someone would be able to get a loan amount of $542,000, purchase price of roughly $560,000, having $1,000 on their back part of the ratio, and still be able to get that $7,000 down payment assistance program. So understanding your AMI limits is kind of crucial and can be beneficial in knowing which affordable product to potentially put someone in. In other instances, if someone is got really low credit scores, the other affordable product would be maybe to take someone to FHA and go that route. But that's up to the loan officer to try to help guide you through which affordable product is best for you. My name is Kevin Retcher. I'm owner of First Meridian Mortgage. I can help figure out your AMI and point you in the right direction in any of the states in the country. I do have 34 states covered by other broker owners like me that I can refer you to. I get nothing out of it other than helping you. So if you're watching this video, I am, it's my pleasure to help you. So my name is Kevin Retcher, owner of First Meridian Mortgage. Talk to you soon.